Hey, come close. I need to tell you something that most people find out only after it's too late. You know that health insurance policy sitting somewhere in your phone? The one you pay for every year? The one that gives you that little sense of relief? Yeah, that one. What if I told you that policy might not protect you the way you think it does? I'm not trying to scare you. I'm trying to save you. Because I've seen people, good, hard-working people, who paid premiums for years, and when they finally needed their insurance, they got a bill they never expected. Today, we're going to talk about health insurance, but not the boring textbook version. We're going to talk about the real stuff, the tricks, the hidden traps, the fine print that insurance companies are very, very quiet about. So grab a chai, sit down, and let's have a real conversation, friend to friend.
Let's start with the biggest lie we tell ourselves. I have a 5 lakh cover. I'm sorted. Are you though? See, when you buy health insurance, you look at one number, this sum insured. 5 lakh, 10 lakh. Sounds big, right? Feels safe. But here's the thing nobody tells you at the time of buying. That 5 lakh, it almost never comes to you fully, because hiding inside that policy are things called sublimits. And sublimits are basically silent cuts. Let me explain with a real example. Imagine you get admitted to a hospital, private room, AC, nice hospital. You're there for 5 days and your total bill comes to rupees 2.8 lakh. Your policy is for 5 lakh. So you think, perfect, I'm fully covered. But then the insurance company says, sorry, your room rent sublimit is 1% of sum insured per day. 1% of 5 lakh is rupees 5,000 per day. But you took a room that costs rupees 8,000 per day. Now here's the evil part. It's not just the room rent difference they cut. They proportionately reduce the entire bill. Every doctor's fee, every medicine, every procedure, all of it gets cut in the same ratio. So instead of rupees 2.8 lakh, they might pay you rupees 1.6 lakh, and you're left paying rupees 1.2 lakh from your own pocket for a room. This is the room rent sublimit trap, and it's one of the most common ones.
Now, room rent is just one. Let me quickly walk you through the other sublimits that are hiding in most standard policies. 1. ICU charges sublimit. Some policies cap ICU charges separately, like 2% of sum insured per day. ICU in a good hospital, easily 15,000 to 25,000 rupees per day. You do the math. 2. Disease-specific sublimits. This one will shock you. Some policies say for cataract surgery, maximum 25,000 rupees. For knee replacement, maximum 1 lakh rupees. Even if your sum insured is 10 lakh. The actual surgery might cost 1.5 lakh rupees, and they'll only give you 1 lakh. Done. Fixed. Non-negotiable. 3. Ambulance charges. Capped at 1,000 to 2,000 rupees in many policies. A decent ambulance in a city today, 3,000 to 5,000 rupees easily. 4. Doctor consultation fees. Yes, some old policies even cap how much they'll pay for the doctor visiting you during your stay. These sublimits are not hidden in some secret document. They are in the policy wordings, but written in such dense technical language that most of us just never read it. And that's exactly what they count on.
You know what this reminds me of? It's like going to a restaurant, ordering a full meal, paying full price, and then they bring you half the food and say, "Sir, your sublimit for rice was 2 spoons." You'd be furious, right? But with insurance, we don't even know what's happening until the bill arrives. Okay, so now that I've made you a little anxious, let me also give you the solution. Because knowing the trap is half the battle. Step 1. Go find your policy document right now. Not the brochure, not the welcome letter, the actual policy wording document. Search for the word sublimit or limits or capping. Step 2. Look for room rent limits. If it says 1% of sum insured, that's a flag. Step 3. When buying a new policy or renewing, specifically ask for no room rent sublimit policies. They exist. Companies like Niva Bupa, Care Health, HDFC Ergo have variants without room rent caps. Step 4. Pay a slightly higher premium for a better plan. The difference is maybe 2,000, 3,000 rupees a year, but at the time of a claim, that small difference can save you 1 to 2 lakh rupees.
So that's part 1, and honestly, this alone is more than what most agents will ever tell you. We talked about sublimits, the room rent trap, disease-specific caps, and how to start protecting yourself. But wait, we haven't even gotten to the cashless claim traps yet, and trust me, that part, that's where things get really interesting.
Okay, so now you know about sublimits. You're already smarter than 90% of policyholders out there, but we're just getting warmed up. Because now we need to talk about something that has genuinely caused people to break down, literally, at hospital billing counters. We're talking about cashless claims and the traps hiding inside them.
When insurance companies sell you a policy, they say this one magic word, cashless. And it sounds so beautiful, doesn't it? You walk into a hospital, show your card, get treated, walk out, no stress, no bills. Insurance handles everything. That's the dream they sell you. Here's the reality. Cashless is not a guarantee. It's a request. Let me say that again. When you apply for cashless treatment, you are requesting your insurance company to approve it. And they can, and very often do, say no, or partial yes, or yes but with conditions. And the worst part, they don't always tell you why clearly. You're lying in a hospital bed, or your family member is, and someone from the billing department is standing there saying, "Sir, insurance ने partial approve किया है, बाकी आपको देना होगा." That moment is one of the most stressful moments a family can face, and it's completely avoidable if you know what's coming.
Let me walk you through the most common cashless traps. These are real. These happen every single day in hospitals across India. Trap number 1, the network hospital illusion. Your insurance company gives you a list of network hospitals, hospitals where cashless is available. You pick one from the list. You feel safe. But here's the catch. That list gets updated. Hospitals get removed, and nobody tells you. So you walk into a hospital that was on the list 6 months ago, and today it's not a network hospital anymore. Now you pay from your pocket and then claim reimbursement, which is a whole different nightmare. What to do? Always, and I mean always, call your insurance company's helpline the day before a planned admission and confirm that the hospital is still in the network. Don't trust a PDF list from 3 months ago. Trap number 2, the pre-authorization delay game. When you get admitted, the hospital sends a pre-authorization request to your insurer. The insurer is supposed to respond. But sometimes they take their sweet time. They ask for more documents. They ask the hospital for more details. They send a query. Hospital responds. They send another query. And while all this is happening, you're in the hospital worrying and the clock is ticking. Sometimes for emergencies, they approve quickly. But for planned surgeries, the back and forth can take hours. Sometimes they give a partial approval, say $80,000 for a procedure that actually costs 1.5 lakhs, and tell the hospital, start treatment, we'll review the rest later. The hospital then comes to you and says, the balance amount you need to deposit first. What to do? For planned hospitalizations, initiate the pre-authorization 3-4 days in advance. Don't wait till the morning of admission. Give the insurer time and give yourself buffer time to escalate if needed. Trap number 3, the not medically necessary rejection. This one will make your blood boil. You're admitted, you're sick. Doctor says you need to stay. You stay for 3 days. You get treatment. Then the insurance company reviews your claim and says, in our assessment, this condition could have been treated on an OPD basis. Hospitalization was not medically necessary. Translation, we don't want to pay. They have their own panel of doctors, people who've never seen you, never examined you, making decisions about whether your admission was justified. Common conditions targeted this way: viral fever, mild dengue, gastroenteritis, minor injuries, anything where the doctor's judgment call is involved. What to do? Make sure your treating doctor clearly documents in the case file why hospitalization was required. Patient required IV fluids and monitoring. Those words matter. Could not be managed at home due to documented. Good documentation is your best weapon. Trap number 4, the consumables exclusion shock. You get your cashless claim approved. Wonderful. But when the final settlement comes, you notice they've deducted $8,000 to $15,000. You ask why. They say consumables are excluded. Consumables, things like gloves, syringes, cotton, surgical tape, IV tubes, PPE kits, all the small items used during your treatment. In many standard policies, these are not covered. Some newer premium policies now offer consumables cover as an add-on. If your policy doesn't have it, now you know to add it. Okay, now let's talk about something that affects so many families, especially those buying insurance a little later in life. Pre-existing diseases, or PED as the industry calls it. Here's the deal. When you buy insurance, any condition you already have, diabetes, hypertension, thyroid, asthma, that's a pre-existing disease, and most policies don't cover it immediately. There's a waiting period, usually 2 to 4 years. During this time, if you get hospitalized for anything related to that condition, it's not covered. Fine, you say. I know about waiting periods, but here's the sneaky part. What counts as related? You have diabetes. You get admitted for a kidney infection. Insurance says diabetic patients are prone to kidney infections. This is related to your pre-existing condition. Claim rejected. You have hypertension. You get a small stroke. Insurance says hypertension is a known risk factor for stroke. Related. Rejected. The connection they draw can be very broad, and you have very little power to argue in that moment. What to do? First, never hide pre-existing conditions when buying insurance. I know it feels like it'll increase your premium. It will. But if you hide it and they find out during a claim, they'll reject the entire claim and potentially cancel your policy. The risk is not worth it. Second, look for policies with shorter PED waiting periods. Some policies now offer 1-year waiting periods. Some even offer PED coverage from day 1 if you pay a higher premium. Third, buy insurance when you're young and healthy. The earlier you buy, the fewer pre-existing conditions you have, and the waiting period gets over before you actually need the coverage. While we're on waiting periods, let me quickly cover the other waiting period traps, because there are more than just PED. Initial waiting period. Most policies have a 30-day initial waiting period from the date of purchase. Except for accidents, nothing is covered in the first 30 days. Get admitted on day 15? You're paying yourself. Specific illness waiting period. Certain diseases like hernia, cataract, joint replacement, piles have a separate waiting period of 1 to 2 years, regardless of whether they're pre-existing. So even if you're perfectly healthy when you buy the policy, your knee surgery in year 1 might not be covered. Maternity waiting period. Planning a family? Most maternity benefits kick in only after 2 to 4 years of holding the policy. Buy insurance for maternity early, like much earlier than you think you'll need it. I want to just pause here for a second. I know this is a lot, and I know it feels overwhelming. You might even be feeling a little angry right now. Why is it so complicated? Why don't they just tell us this stuff? And honestly, that anger is valid. The system is designed to be complicated, because complicated means most people don't read it. And when people don't read it, companies save money. But you're watching this. You're paying attention. And that already puts you in a completely different position than most people. So in part 2, we covered cashless claim traps, the pre-authorization game, not medically necessary rejections, consumable shock, pre-existing disease tricks, and waiting period games. One more part to go, and in part 3, we're going to talk about claim rejection tricks, the co-payment trap, how to actually fight back against your insurer, and the 5 things you must do right now to make sure your policy actually works when you need it. All right, we're in the final stretch, and I want you to stay with me here, because this last part
This is where I give you the weapons, the things you can actually do, the things that turn you from a confused policyholder into someone who knows exactly how to handle the system. But first, a few more traps we haven't covered yet, because I feel terrible sending you away without telling you about these.
Have you ever seen the word co-payment or copay in your policy and just skipped past it? Most people do. It sounds small, technical, harmless. It is not harmless. Co-payment means you agree to pay a certain percentage of every claim yourself, always, no matter what. So let's say your policy has a 20% co-pay clause. You get a bill of 3 lakh rupees. Insurance pays 2.4 lakh. You pay 60,000 every single time. Now here's where it gets really tricky. Many policies, especially senior citizen policies, come with copay as a standard feature, sometimes 20%, sometimes even 30%. And when an agent sells it to you, they mention it so quickly and casually that it doesn't register. Or worse, some policies have voluntary copay options. They say, choose a 10% copay and get a 15% discount on your premium. Sounds like a good deal, until you're 68 years old, in a hospital with a 5 lakh rupee bill, and you're paying 50,000 rupees from your savings because of a discount you took 10 years ago. What to do? Avoid copay clauses wherever possible. If your current policy has one, factor that into your emergency fund planning. Know the number. Don't be surprised by it at the hospital.
Okay, this is the one that genuinely upsets me the most. Because claim rejection doesn't always happen because you did something wrong. Sometimes it happens because of technicalities, tiny procedural things that insurance companies use as reasons to deny your claim. Let me walk you through the most common ones. Rejection trick number 1, non-disclosure. When you filled your proposal form, that long form when you first bought the policy, did you mention every health condition, every surgery you ever had, every medication you take? Most people don't. Not out of dishonesty, just because they forgot, or they thought it wasn't relevant, or the agent said, "Don't worry, it's a small thing, just leave it." Big mistake. If you get a claim and the insurance company investigates, and they do investigate, and they find any undisclosed condition, they can call it material non-disclosure and reject your claim entirely. Sometimes they reject claims for conditions that have nothing to do with why you were hospitalized. You didn't mention a thyroid issue from 5 years ago, you're now claiming for a broken leg, and they find the thyroid during investigation and say, non-disclosure, claim rejected. What to do? It's not too late. If you have an existing policy and you realize you forgot to mention something, contact your insurer and update your medical history. Yes, your premium might go up slightly, but your claim will be safe. Rejection trick number 2, lapsed policy trap. This one is painfully simple and painfully common. Your policy renewal date passes. You forget to renew, maybe by just 10 or 15 days. You assume there's a grace period. You get hospitalized during those 15 days. Claim rejected. Policy lapsed. Most policies give a 30-day grace period, but here's the catch. During that grace period, new claims are not covered. The grace period is only to renew without losing your accumulated benefits like no claim bonus and waiting period completion. It is not a coverage extension. What to do? Set a reminder 45 days before your renewal date. Renew early. Never let your policy lapse, especially if you've been building up years of waiting period completion. Losing continuity means some waiting periods reset. Rejection trick number 3, intimation deadline miss. Most policies require you to inform the insurance company within a certain number of hours of hospitalization. For emergencies, usually 24 hours. For planned admissions, 48 to 72 hours before. Miss that window? They can reduce your claim, or in some cases, reject it. When you're rushing someone to the hospital at 2 a.m., calling the insurance helpline is the last thing on your mind, and companies know this. What to do? Save your insurance company's helpline number in your phone right now under a name like Health Insurance Helpline, and when someone in your family gets admitted, after the immediate panic settles, within the first few hours, make that call. Even a brief intimation call protects you.
Rejection trick number 4, daycare versus hospitalization confusion. Modern medicine is amazing. Many procedures that used to require 3-day admissions now happen in a few hours. Cataract surgery, dialysis, chemotherapy, certain minor surgeries. These are called daycare procedures. You're in and out the same day. Old policies required a minimum 24-hour hospitalization to file a claim, so daycare procedures weren't covered. Most modern policies now have a daycare procedures list, sometimes 500+ procedures, that are covered even without 24-hour admission. But, and here's the trap, if your procedure is not on that specific list, it might still get rejected, even if it was done in a hospital, even if a doctor performed it. What to do? Before any planned procedure, call your insurer and specifically ask, is this procedure covered under my policy? Get it in writing if possible. Even a confirmation email works.
Okay, enough about the traps. Let's talk solutions. Concrete, actionable, do it this week stuff. Thing number 1, read your policy wording document tonight. Not the brochure, not the welcome kit, the actual policy wording PDF. Search for these words specifically: sublimit, copayment, waiting period, exclusions, room rent. Make a small note of what you find. Just knowing these numbers puts you miles ahead. Thing number 2, call your insurer and ask these 3 questions. Seriously, call them. Ask, what is my room rent limit per day? Does my policy have a copayment clause? What are the specific illness waiting periods in my policy? If the answers make you uncomfortable, you now know what to fix at renewal time. Thing number 3, build a claim-ready document folder. Create a folder, physical or digital, with your policy document, your insurance card, insurer helpline number, your agent's contact, a list of network hospitals near you, any past medical records, especially for pre-existing conditions. When a medical emergency hits, and nobody is calm in that moment, this folder is your lifeline. Thing number 4, consider a top-up or super top-up plan. If your base coverage feels low, say 3 or 5 lakh, don't just upgrade your policy. That's expensive. Instead, look at super top-up plans. These kick in after your base policy is exhausted. A 20 lakh super top-up over a 5 lakh base often costs just $3,000 to $5,000 a year extra. It's one of the best value decisions in health insurance. Thing number 5, if your claim gets rejected, fight back. This is important. A rejection is not always the final word. Here's your escalation path. Step 1, write a formal grievance to the insurance company, not just a phone call, a written complaint. They are legally required to respond within 15 days. Step 2, if unsatisfied, go to the insurance ombudsman. Every city has one. It's free, it's independent, and insurers take it seriously. You can file online at cio.co.in. Step 3, for genuine mis-selling or serious rejection cases, approach the IRDA Bima Barossa portal or call 155-255. IRDA is the regulator. A complaint there gets attention. You paid premiums for years. You have rights. Use them. You know, when I started thinking about making this video, I thought about all the people I've seen go through a medical crisis. And the ones who struggle the most, it's never because they didn't care. It's because nobody sat them down and told them the real stuff. Everyone sold them a policy. Nobody explained it. That's what today was about. Health insurance is not a bad thing. It's actually one of the most important financial tools you have. A single hospitalization today can cost 3, 5, even 10 lakh rupees. Without insurance, that wipes out savings that took years to build. But insurance only works, truly works, when you understand it, when you know the sublimits, when you know the cashless traps, when you know your rights. So here's what I want you to do after this video ends. Don't just watch and move on. Pick one thing from today, just one. Maybe it's reading your policy tonight. Maybe it's saving the helpline number. Maybe it's calling your agent tomorrow and asking hard questions. One thing, that's all. Because the best time to understand your health insurance is before you ever need to use it. Take care of yourself. Take care of your family. And hey, share this with someone you love, because this is the kind of thing that actually matters. See you in the next one.